Microphone check and screen share check, please. Okay, let's go ahead and get started. This is the Nightly Strategy Podcast for August 10th, 2022. I'm not going to publish the daily report today. I'm rebuilding the database, and what I'm going to do is go through all the other elements of the setups and continuations and sniper trading. And I'm going to replace the daily report today with a couple sets of insights. Really, there's no new trade setups tomorrow except for continuations from today anyway, so it's timely. All right, so this is from a coaching checklist for trading that we put together for the interns, and I think it does a pretty nice job of laying out what it is you need to do, whether you're an intern or not. So this is what we said our interns are doing. Precisely describe and list your trading rules in a checklist format so that there's no unclarity about what the rules actually are. And then trade your rule set exactly. And then evaluate your adherence to the rules on a go or no-go basis on every member of that checklist. Then at the end of the day, using the daily after-action review format, record your self-analysis in writing in your learning journal for sustains, improves, and action steps in the 4 phases of plan, prepare, execute, and assess. You're going to record your trade results in a histogram using our little format. And then you're going to evaluate your histogram every 50 trades, along with an evaluation of your trading performance, which summarizes the notes from your daily after-action review. So every 50 trades is what gives you the large enough data set to actually take management action on the basis of data. Then while you're preparing your analysis, in writing, record what you think I'm going to say about your performance and your histogram. So or whoever your coach is, you're going to anticipate what it is we're going to say. Can you look at your own performance through a neutral coach's eyes? And then, when you listen to what I do say, compare what I say to what you thought I would say, looking for similarities and differences, omissions, and additions. Then reflect and journal in writing upon that reflection as you think about that sequence. Next, you want to establish a master task list with priorities for action that is the basis of your focus for effort. As you go through your daily AAR, you're making a list of things to take action on. You're constantly reevaluating your priorities and making sure that you're working on the most important things. And then when you choose the things to work on, you want to minimize your work in progress to the most important 3 things, so you can, it's not multitasking, but you can shift focus a little bit. So if you get burned out or bored or just out of gas on one of them, you can shift and be right on the next most important task. And you're going to minimize your work in progress until you get those 3 things, to just those 3 things. And then when one is completed, you just add another one, replacing it therefore with your next most important thing. And then you're going to coordinate all of this with your accountability partner for a review each week, and then you do the update with your coach once a month, when you update me on your project and your progress. That's what coaching with us looks like. This is the result of some coaching that I've been doing with Eric Morrison, Dr. Eric Morrison, who did the Forex course for us about 3 years ago. So I've been teaching with him for 10 years. He was a rocket scientist at NASA, and then is teaching with me at the Army College. And he was a Forex trader, and so I started working with him about 3 years ago, and kind of cleaned up his systems, standardized them, added some simplicity, or took away some complexity, if I can say it that way. Had him design a Forex course in a couple iterations with the help of some Forex traders, and we've got that thing, I think, bulletproof on version 3.0. It is a production system, and it trades the 24 major pairs every week, all week, and is flat over the weekend. So this is from his most recent weekly review from Friday. He goes through all the charts, and these were the summaries of performance. So these are the sum of the trades for each of the majors. So the net of the trades, I should say. The average weekly absolute value of those trades, the average of the absolute values was 2,000. So what I did was I took half of that absolute value of the average trade and set that equal to 1R, so that's 1,000. So when we're going through these numbers, all I did was just divide it by 1,000 to come up with a relative R relative to the size of the performance of the 24 pairs. And the sum of their gains, because this is a community of practice that is trading hourly bars with scripts, essentially robots, and they've automated the trading process, and they just monitor it on a daily basis and then get flat on Saturdays. And this is what last week's performance looked like with standard lots, risking $2,000. The winning trades were 43,730. The losing trades were 10,000. So if you count that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So 19 winners, seven losers. That's about a 75% win rate. And the average win compared to the average loss was about 4-1. And the net for the week was 33.5. And you can see in some cases, like this loss of -2R and -4R, that's not an individual trade, but that's the sum of the trades that happened during the week. So none of the individual trades themselves were more than one. But the way I look at their system now is I just have them count the weekly trade as, one chunk as one trade, and then just take the net. So in this case, I'm not offended if the trade lost more than 1R, because I kind of like the numbers that he's got right here. So he's got a online course with us on Rizuku, like all our other courses, and they meet weekly in an operations group where they work together on robotic scripts and mutual coaching and a little community of practice. And the guys in that group have been working together for over 2 years because they were all involved in the development of the systems and in the coding of the robots and in the development of the course, and they got a good thing going. Unfortunately, it's so good that Eric is leaving the Army College to trade full-time because the Army's been acting stupid in the college lately, and he just says, enough is enough. And this is going to allow him to concentrate full-time on this. I would get on board this if you're interested in Forex at all before the doors close. We're getting ready to expand this to a large group of traders outside of the Tharp Institute, and I think the slots are going to fill. So if you're interested in this, I would get a hold of Dr. Morrison sooner rather than later. They're using tortoise techniques on hourly charts, and it can be traded robotically with scripts. So you might give that a shot. You can see information on that on my website on tortoisecapital.net for links for more information. So good job to those guys. So I want to take a multi-time frame, multi-lens analysis at the market and just see kind of where we are. So this represents a 150-day look-back period right here, and I just want to highlight some things that are going on. So first, these are 30-day blocks that I've outlined right here, or that I'm outlining right now, etc. So you can see the high and the low, and now the RL10 is what I treat as the price. And I want you to notice how orderly this move has been consistently for the last 150 days as measured by the PSAR. You get really nice trending lines by using the PSAR settings that we use and by gearing that to the RL10 to make the computation. So it takes the RL10 to pass through the PSAR to make it flip. And so what that does is it makes it much less noisy. Like there are a few cases where you can see that the price has gone through and touched the PSAR, but we don't treat that as a PSAR flip until the RL10 actually makes the flip. As you can see, it does, like say right there, is where that flip occurs. Now it's possible to trigger on price hitting that PSAR, especially if you got a position in. But then when the RL10 doesn't follow through, you can quickly re-enter the trade in the primary direction. So as an example, this would be a standard way to treat that. We'd have been short from that PSAR flip. If this were to get you out because of your rules, then the collapsing dragon that hits right here gets you right back in short because the RL10 did not go through the PSAR and it resumed the move down. So in both of those, in this case as well, the collapsing dragon that happens right there is a really good way to re-enter trades that get maybe ticked out from price hitting the PSAR. I don't mind you getting out when price hits the PSAR, but in terms of reversing the trend, that doesn't happen until the PSAR flips itself. And that's why when we do get a PSAR flip, the moments like this really do matter. Here's a piece. There's a PSAR flip right there. Here's one right here. Those PSAR flips, in our view, now we're able to zoom in on really important changes in market directional bias, and that right there, I cannot emphasize too much how important that is in managing market direction and market bias, especially if you're trading with things that are aligned with the S&P. If you pay attention to that, you should have a very clear market bias. Like those of you keeping score at home with us know that we've been cautiously long this entire move here because of the PSAR flip that happened right here, and we have been reliably short that whole way down, except for this brief upside, which was then triggered us back onto the short side here. So I want you to add that to your repertoire if you haven't before. I think you want to pay attention to that. Let me clean that up for you a little bit. God dang it. There we go. Now, where we are right now is we've just made a nice move back. This price action that we have right now, The mouse is sensitive tonight. Has gotten us all the way back to test this little hump and test. This is where the move down collapsed, and it's also where this found support, and basically found support on the first leg. I'm going to give it a little credit, like right back in here. So this price here around 419, 420 has historically been very important for the last 6 months. So we really are at a crucial price level right in here. The market has made bold moves out of this price range consistently for the last 6 months. So after a really nice move off the bottom here, this is why I consider this to be such an important critical state. Today was a good move towards the upside. As you can see right here, we're starting to make that move up. Now when I zoom in on the 30-day, now you can see that what we got here is here's that 30-day, or I'm sorry, that's a 10-day. This is another 10-day, so that's days 11 through 20. Excuse me. Here's our 10-day box. Here's our 5-day box. Right, and then here's the last 10 days. So I like looking at things in 10-day chunks. On the closer one, I like looking at the closest 5 and the next 5 in that 10 to get that sense of early turning. And then I just compare that to the 1-day box compared to the 5 and the 10, then the next couple of 10s. And then that leaves me this outside box as the 30-day range. Now I feel like that gives me multiple looks at different time frames, all within one single chart. And now what I really like about this one is, today was a gap up which held and closed at the top of the trading range, and I consider that to be a pretty favorable thing. Now if we zoom in, this is now our 10-day box on 30-minute charts. So all those other ones were dailies. So now this is the 30-minute box, or 30-minute bars, and there's a 5-day, which is really this one, and here's today. Right, so one of the things you can see is that today's little gap up, which held above the previous peak, I consider that to be a very favorable sign for a couple reasons. One, it held the gap all day, but also it was a relatively small range day, meaning there was not a lot of furious trading going on. And this looked like a price gap up that stabilized and held, so I consider that to be an encouraging sign, and especially when we're right up here at this, what looks to be a key price level around 420, as I showed on the previous chart. So cautiously optimistic here, and this was the first effort really for the market to get out of this long sideways channel that's kind of been looking like that. Today was actually a vote to the upside, a quiet step, but a step nevertheless. All right, let's look at the sectors. All right, so we had the S&P today up 2.1%. That's very favorable. Underperformers in the indexes, the big indexes, were the Dow, only up 1.6. Emerging markets up 1.25. Treasuries were the only one of the big indexes we follow that was below the red line between positive and negative at minus 0.65. The things that outperformed were the two speculative aggressive indexes, tech at 2.8, That's a very healthy sign for the market. But even healthier, in my view, is the Russell, which is the broad-based speculative traders at 2.86. So both of those are really favorable looking for going into the market tomorrow. Let's look at the downside, underperforming the S&P, the sectors. You have Mexico and the Aussie dollar at 1.8, 1.7. Oil exploration, wheat and precious, real estate, blended commodities, marijuana, agriculture between 1.6 and 1.3. And then oil, staples, and energy between 1.2 and 0.7. And then only treasuries and the VIX were below the red line today. And then VIX at minus 2.28 is actually a positive sign when the price of insurance is lowering. That's actually a favorable indicator to the upside. So that's a pretty good looking lineup right there. The only two targets that we had that underperformed was Rivian at 2% and Devon Energy at only 1.71. That's a pretty good day when your two underperforming targets are up 1.7. So we don't mind that. Let's look at the upside so we can focus on maybe some continuation trades for tomorrow. So again, you got the S&P here at plus 2.1. The first set of sectors, finance, Brazil, and lithium, 2.3. Bitcoin, tech, consumers, discretionary, and materials, up to 2.8. Then a nice cluster here of wood, blended large cap crypto, commercial real estate, the other lumber, biotech, and FANGs up to 3.67. Really nice move in Tesla today at almost 4% to close at 883. It's still got another 8% to go to get to the key price level of 950, which was where it surged to last time. So there's actually still more room for Tesla to go. Blockchain, 4.7. And then the big winners, mostly these disruptors like Ethereum, Global Future of Finance, Arc Innovation, Coinbase, Arc Genomics between 7% and 9%. And then clean energy making a really strong move here at 6.5%. Squarespace, the big winner of the day at 9.5%. Alcoa doing well in the metals at 5%. Robinhood, PayPal, Cliff doing well in the metals at 3.7. Apple and Microsoft doing better than the S&P. That's a good thing. Not quite as good, though, as the tech peers. But U.S. Steel up 2.37. So if we look at the metals as a sector, the ones we're tracking anyway, we like to track U.S. Steel, Cliff, and Alcoa, all doing really well, all better than XLB, or mostly better than XLB, and steels look pretty strong today. All right, let's look at some sniper trades for the day. All right, this is U.S. Steel. These are all on 3-minute charts now. So this one was an OR3 where we had this and this, and then the second bar opened and then started failing immediately. So I get short with a standard risk box. And that right after entry, that thing reversed and went up. So I'm -1 on that one. Right off the get-go. That's a stop and reverse. So now I've got, so now I'm long here with that same risk box, but now to the downside. So we tried this, it failed. We exit, stop and reverse, and then we cash this one, which is about plus 0.7, and that's minus 1. So we're net about 0.3, minus 0.3 right now. This is a Kata 2, which scratched almost immediately. I was a little gun shy from this, from how volatile this was. So this one started going up. It rejected slightly below the RL10, so I looked at that as a warning sign. So when this rolled over, I was happy to get out of that with a scratch. This came back through here and then reversed. And I treated this as a Kata 2. So long here, standard risk. And really, it has to get above this peak of the RL10 to be very interesting. What that means is this space inside here is the tactical trade. But you see how fast it moved right through there. So I'm actually feeling pretty healthy about that right now. Sort of a standard exit. We're now at about plus 0.2. Kata 2. Fractional win. Just doesn't feel like there's much traction in U.S. Steel today. Missed the short. So I think it was that was about a net scratch in U.S. Steel. Just was not a lot of follow through after the early volatility. The other metals were better. Now this one is XBI. This is the S&P Biotech. It's one of the 30 most powerful or most liquid of the ETFs. All right, so this one is where are we at here? This is XBI. That's the biotech. So this one is your OR3 here. It fails through the low of the first bar. It moves down 3 bars and starts to recover. So we go ahead and capture that gain compared to that standard risk. Let's see. Okay. So we're up about plus 1. We get a Kata 2 short signal here where you have a high, a lower high, then like a collapsing dragon Kata 2 and it reverses the PSAR. Here's your PSAR flip, which just happens to be the exact size of standard risk box. So that's a good thing. So now we're short. Fractional loss, stop and reverse. Fractional gain. Time to take a break. That thing has got no follow through. I treat this one as a Kata 2. It held support right where it held support before. That was a long downward trend, but it failed to follow. It failed to fail instead. So I give this a try. I'm taking that as the risk box. I'm going to execute on the base of the RL10 right here. So I'm really only risking that much. Like I would stop and reverse if that price level were violated. Okay. trusting the PSAR gets us a nice trade. So there's 1 unit of risk. So that's about 1, plus 2. And that took us right into the close. So pretty good work on that one. Once it got out of that morning chop, it did fine. Next up was Tesla, our $5 risk box. So this one, gap open way high. Here's the OR3. Second bar opens here and then fails down through that. So we get short with a standard risk. And looking for this thing to fail. That would be nice. And it was just committed to the PSAR. Got it. So there's 1 unit of risk. 1, 2, 3. Gave back more than I like, but this was also a lot more volatile in here than I typically like. So I was committed to just riding that out. Once I'd gotten past about here, I was content just to use the PSAR, and that smoothed it out quite a bit. So this PSAR exit gave us a PSAR flip with a standard risk box right here. Fractional gain. Again, I think I gave back more than I wanted to under usual conditions, but again, this had been so volatile, I was content just to let the PSAR be my guide. Caught a 2, -1 loss. Caught a 2, about a +2 gain. So this was about, what did we say? This was maybe 1, 2, 3, +3, +1, -1, +2. So we're at about +5-ish. And it was starting to diminish. Next up is Alcoa in the metals. Again, find the movers. So this one broke out immediately from yesterday's close. It moved a risk box off the bottom. So just hold my nose and buy it. How quickly can I get my stop to no lose plus dinner for 2? Turns out to be pretty quick. Finding the movers. Standard exit. 1, 2. That was so much stronger than US Steel and the other symbols that I was not interested in the short side. Caught a 2, resumed right away. Another +1. Caught a 2 for a scratch. So this whole arc, when that starts up big and then starts to diminish, that feels like one big leg up on the higher time frame. That's just sort of like leg 1. So when this comes into the station like that, I think, is it gonna fall back to halfway, or is it gonna go much higher? I don't know, but I'm ready for a bracket trade now. to see what happens out of this. And really no follow through. This would have been a legit effort on the upside, which should have lost a half an R if we'd done that one. So that this one should net about 2.5 for the day if you take that last trade. Next up, Coinbase. OR3 breaks out above the RL10 from yesterday, so buy it. Standard risk. I'm really executing off of this, so I'm only really risking that much. This thing just takes off sharply. Standard exit for +2. PSAR flip, I get short. PSAR flip, I get long. See, the size of the moves are starting to diminish. Missed the short. Man, missed a nice short. This thing was just so nervous in the service, and there were other better things happening in the afternoon, but that was still about 3R, maybe 4R, a good contribution to the team from there. Finally, clean energy. I'll zoom in on this one. A little bit easier to see. So here's the OR3. Opens here. Sells off, so I get short. It's working in my favor. I stuck around too long and took minus 0.7. Here's the reversal of the dragon. This feels like a Kata 2. Standard risk. Minus a half. Kata 2 re-entry on the PSAR flip. So that one's working nicely. That one returns about 2.5. Kata 2 re-entry. Oh, it's still trying. And then took a, if I remember right, it took the exit before the, before the close. So that one returned another R. So once that started going, this was actually not too bad. It took the first two losses were about half an R each. So that nets to -1. Then this one is +1, +2. So that's +2. So we're net +1. And then this one returns about +1. So +2 for the day on PBW. So we'll take that. Not too shabby. All right, we'll look at we'll conclude with the traders from today. See how the boys did. All right, here's Luke with the 5-minute Aussie. +5.5 today. Here's the nice tight wrist box on the Z3 pinch. Here's the breakout. There's an R10 wiggle right in there. Might have had a second position here, but he gets paid nicely. This rebound happened pretty harshly, pretty quick. So gets paid nicely there. Here's the PSAR flip. He waits for it to cross the Bollinger Band mean, gives back maybe more than he really wants, but he'll take that. The Z3's pinched. He waits for the SSC, gets paid, gives this one a try, gets out of it, re-enters, gets paid, and that's 5.5. Pretty nicely done. This is one of the few cases where we're out of the market and it helped. So I guess sometimes that'll happen to the team. All right, Arch. Let's see where we are here. For a minute there, had a nice trade in hand. I don't mind you getting out of that at a scratch because we don't know that that's not going to go. But this is where you got to re-enter, and then you'll get this piece. The PSAR flip was a little slow. And you cut your losses, but when you see that little wiggle, that's where you got to get long. You'll get paid in here. And then if you get out in here, this is a great re-entry to get paid. Traded a couple in the chop here, 3, 4 in the chop. I might say, hey, take 2 and then take a break. Here, after this one fails quickly and it rolls over, this would be the next re-entry. But you did nail this one. Now, when you've got that kind of move in you got like maximum favorable excursion of almost +5. We can't give back that much, especially given the amount of grinding that was going on in here. So there's some tightening up that we got to do. Less 1.9. Here is a Z3 pinch. Tries to short, cuts it quickly, stops in reverse at the PSAR flip, gets paid for 0.6. Now we got a COTA 2 and PSAR flip gets paid for 1. This was another COTA 2. We might have gotten long on that one. I like the PSAR flip to get paid. And 1.9 for the day. Well done. Wojcik. Let's see what we got here. 0.5 and 1.1 in Tesla and Devon. That's a good shot to the downside. I'd like to see your reentry hit here or here, but still that's enough to get you paid. But when we're that late, we got to capture more of it than letting all that get away. Here was another reentry that would get paid. And then we were a little slow. This could be done in here rather than here. And that's a good shot. So 0.5. Good scratch, got paid. This was premature. That's a stop and reverse, I guess, but that's not any of our signals right there. I mean, that's not even a 1, 2, 3. If you trust the dragon and the PSAR, that's the first trade you make, and you don't get chopped with those. That's a good one to get paid. And then saw this chop happening, so you just wait for it to break out. It never did. So 1.1 in Tesla could work. Ethereum. Yeah, I don't know, wait too long. Yeah, we would expect this thing to break, but once you're in it, as long as you make that a stop and reverse, at least you're in it and you're not chasing it if it fails. So that's pretty good. This one was a good reaction. It's hard to be better than that, to be honest. And you got paid where you needed to for about 1. And then, let's see, this is the Aussie. So 1.7 for the day. Oh, that bar appears in 1 second and on news. Yeah, not much you can do about that. But you did get paid on that next leg up a couple times. That's good. Almost getting a little choppy in here. So not bad work all the way around. All right, that's everything we got for you today. We'll get back to the regularly scheduled daily report tomorrow, but I wanted to take a break from that and focus on some of those larger time frames and get a little more sense of perspective on a Wednesday. Okay. That's everything I got for you. We shall see you tomorrow.